Welcome to today's episode where we're going to be discussing the economic data coming out of the Eurozone, the Commonwealth and Asia, as well as looking at geopolitical risks. All this with Bob Mason of FX Empire. This is the week ahead. Hello, Bob, and thank you once again for joining us. The first week of the month was relatively quiet. This could be due to publication releases being put back to next week. So what could we and what should we be expecting next week?
It's a relatively busy week ahead on the economic data front. And, there's some numbers we're going to need to start looking at now. We're past the March data. So we need to look at April numbers to see, whether that marked contraction in the second quarter is as we expect, or is it going to be worse? So April numbers are going to be, the telltale signs really of what's to come. Lockdown measures are still in place, as we go through to sort of mid-May. So that's pointing to quite a dire second quarter. So what are we looking at? We're looking at employment numbers. We need, unemployment figures to start easing from the levels that we saw for April. And we're going to need to see consumer business confidence figures start improving. So while employment figures are really for April right now, especially, even going into next week, we're going to start seeing business and consumer confidence numbers for May. So that's going to be quite relevant. And then obviously we've got GDP numbers out of Germany at the end of next week. That's the Eurozone's powerhouse. So how does that look? Because that's going to be a lot worse come second quarter. So there is some numbers to look at. And obviously, we're seeing the markets being relatively resilient to the US initial jobless claims figures last week. Is that going to be the same next week? Unlikely. If we see another 3 million jump, that's another cause for concern.
The German GDP currently stands out, and it could appear to the markets as a benchmark for strength within the Eurozone. But what about the Commonwealth countries, specifically Canada? What can we expect there?
Economic data out of China gave a lease of life to the commodity currencies last week. The loonie, the Aussie dollar and the Kiwi dollar found strong support. For the loonie, we've got OPEC in the week ahead. Their monthly report, that's going to be quite telling in terms of how they see their outlook in terms of output and demand. Lockdown measures are still in place. They may be easing, but we're nowhere near, where we should be in terms of crude oil price demand to see a sharp rebound in prices. So loonie pressure is still likely to remain. Economic data out of China at the end of next week, also industrial production, fixed asset investment, retail sales. That's going to give you an idea of what's going on. Obviously there's other stats as well to tell you whether we're going to see a pickup in demand for crude, improved risk sentiment and so forth that's needed for the loonie, to start pulling back from the sort of 140 levels against the greenback. And start heading towards 135. Don't think that's going to happen anytime soon, however, until these lockdown measures have really eased up.
Historical data indicates and shows us that there should be at least a 50 pip movement in the Kiwi dollar and the US dollar pairs on the charts. However, how's it looking for the Asian giants, specifically China and Japan? How are their economies faring and what can we expect next week from them?
Well, the Asian giants, obviously we know what's going on with China. Trump's playing the blame game. That's putting pressure on the yuan, which is still holding at 7 against the greenback. And that's unlikely to start gaining strength and start heading to sub 6.9s. And that's what we talked about a few weeks ago. So it's still holding at 7s. Sub 6.9, I think it would be a hard push, particularly with China, under the hammer and Trump blaming China. And, there's going to be, the talk of tariffs and sanctions for a while yet, and could actually come to fruition, particularly with Trump needing to change the narrative and divert voter attention away from, what's really going on in the US. For Japan, the Bank of Japan's delivered on its support. Fiscal measures are in place. Coronavirus spread's still continuing, however, so lockdown measures are still there. We saw household spending figures last week that were quite dire. So that's likely to continue, even with, the Chinese economy and trade data showing relatively decent figures. It's still not great for Japan for now.
And lastly, to finish up on, let's discuss geopolitical risks. What should our traders be looking out for next week in regards to this?
Away from the economic calendar, I'd say obviously the US and China and US and Iran are the two main areas of focus. Trump really is going to need to change, voter focus away from, labor market conditions, particularly after last week's, non-farm payrolls and continued rise in initial jobless claims. So trade war, sanctions on China, blame them. They may actually end up being able to prove that it didn't come from them, or at least the laboratory. But at least that will, give Trump some breathing space for the next couple of weeks. Then you got obviously Iran. There's no real reason why Trump won't go in and at least strike Iran. They attacked the Saudis and so on, and they have quite a presence in the Middle East. Trump might want to, douse that a little bit. So that would, give oil prices a bit of a boost, over fears of supply disruption. And then finally, you've got, coronavirus numbers. Last week, we saw an upward trend in the number of new cases, across the most affected geographies. So, is that going to give governments a reason to pause and consider or reconsider their plans to ease lockdown measures? So that might be, something from left field that could, send the markets into a loop.
Well, that's all for today, Bob. Thank you so much for joining us, and we'll see you again next week. Stay safe. That was The Week Ahead with Bob Mason. Don't forget to follow us on our social media outlets such as Instagram, Facebook, YouTube, and LinkedIn. And we will see you again next week.